Emily, clearly crypto is still a kind of niche part of the market, even if Main Street is adopting it to some extent. Bitcoin is worth $1 2/3 trillion, though, so you can't really look away. And it represents animal spirits, I guess your risk aversion pretty well. What do you think about the fact that we've gone from 126 on Bitcoin down to 84 in like a month?
Yeah, we would say, Matt, don't get too sentimental about sentiment. And Bitcoin is the poster child for a sentiment indicator to us. We've been struggling for years to identify the value there. It doesn't have any income, it doesn't have any earnings. The only thing that drives it, in our view, is the price itself. And so you're seeing a lot of that unwound. This market in general in 2025 is one that's been very, very much driven by sentiment, technicals, momentum. And we all know how those trades work. If something goes up in parabolic fashion, it tends to come down in parabolic fashion. So because we are seeing a bit of an unwind in terms of some of those momentum winners, those technical titans of the year, whether it's, in the Kospi or whether it's in gold or in crypto, we're starting to see a little bit of that momentum coming out of the market here. So not totally.
Or the momentum stocks, right? Or the likes of Robinhood, for example, the unprofitable tech. Emily, does that mean when you're looking at something like crypto, again, this fear that maybe people are getting margin calls, they have to liquidate other momentum type stocks, that you now need to use crypto to understand where the rest of this risk market is going? And if that is somewhat the case, is it troubling that as the rest of this market bounces, that Bitcoin, you can see it there, is still down nearly 4% this morning?
Yeah, I think it's a really important point about how tied in a lot of these assets are with crypto markets. And I think watching generally, this morning we are seeing some dip buyers coming in. That's certainly the narrative that's pervading markets, and we'll see what happens around 10 or 10:30. But I also wanted to point out that the Fed speak that we've heard this morning may also be contributing to some of the sort of risk on bounce that we're seeing. Powell and other Fed members sort of spooked the markets. It's almost like they've tapped on the brakes a little bit, and the market's really jolted because of it. So you heard hawkish speak, of course, from Powell and then some other Fed members, some of that based on the lack of data amidst the government shutdown. But then John Williams comes in this morning and suggests that, that December rate cut's back on the table. So I think the markets have really been responding to this idea that the Fed's going to loosen financial conditions, even with inflation not back down to their 2% target, and a U.S. economy holding in okay. In a way, that's like the dream scenario for risk investors, is that the Fed is cutting into relatively stable economic growth. So you're seeing that narrative, I think, impacting markets this morning as well.